What's up, everybody? It's your boy Ajay here. Just wanted to go through the trading day today and just show you my observations on JNUG, what I was thinking when I was trading it, what I thought gold was going to do originally, and what it actually did do. So, yesterday we saw a massive decline in gold, and that's why JDST, which is a strong gold ETF, it's actually a short, like an inverse or short version of of what gold is going to do. So, meaning if gold goes down, this ETF is going to go up. So, as we saw, JNUG rallied yesterday about 10%. Um, and because of that, many people were thinking, including myself, that gold was actually going to make a comeback and start rallying today, meaning that JDST was going to fall. So, my eyes were on JDST in the morning, early, as soon as 9:30. I observed it in pre-market. I was like noticing it was starting to fall. As 9:30 opened, it continued to fall further. So that means gold was actually going up. And with that being said, I was looking at key levels right here at this 200 SMA. I knew that there was a bounce, so I was waiting for a rejection to confirm that JNUG was going to continue going higher, gold was going to go up, and the inverse, which is JDST, was going to continue going down. But as we noticed here, after you can see what happened throughout the rest of the day, it continued to rally higher, meaning that gold kept falling and falling and falling and falling. And I think the biggest lesson here is that the market can do anything, right? So never inflict your idea onto the market, because what happens is the market can stay wrong longer than you can stay solvent, meaning that the market can continue going the way it has to, and it could go against everything that makes common sense before you run out of money, right? You can't stay wrong forever, okay? But the market can. So observe the market, work with the market, go with it, not against it, and don't have the idea in your head that, okay, gold's going to go down, gold's going to go up, gold's going to go down, gold's going to go up, whatever it is. Do whatever is happening, okay, if that makes sense, right? If the market's saying gold's going to go up, go long on gold. If it's saying that's going to go down, go long. Go short on it, right? So that's what I did today. And that was a mistake that many people fall into, especially newbies. We all fall into, the mistake of trying to be right, not waiting for confirmation, right? So this is a definition or example of confirmation, because what happened was I looked at this one bar here, this red bar, right? And I thought that it was going to continue going lower. It was the rejection. But I wanted to see a further next bar that started showing signs that JDST was going to fall, meaning that gold was going to go up. But instead, it consolidated area. And as soon as it closed on the other side, I knew that this thing was going to continue higher. And this was going to act as a very strong support for it, which it did for the rest of the day. And this actually happened to be about a 6% gain, right? And the way I was able to fully capitalize was because I understood the signs that it was showing me, and I didn't try to go against it, right? Even though I did have a bias in my head in the beginning, I was like, okay, gold fell yesterday, gold should have it today. But I didn't keep that in my mind, because 9:30 opened, it was showing that exactly, gold is going to go up. This is the moment. I want to nail it, right? I want to make a lot of money off of this. But you know what? That's the one thing. It's greed and it's fear. And don't let that ever control you and your decisions when trading. So with that being said, I'm happy today that I didn't make that mistake that many people would. And I've had made this mistake so many times. So I'm happy, finally, I didn't commit the same mistake that I usually do. With that being said, that was kind of what I had my take on gold today. What I thought, what I saw, the psychology behind it, at least. And the best way to trade anything is to not have an opinion on it. Trade it for how it is, right? Don't do so much research that you become, they say analysis paralysis. When you overanalyze something and you have such a strong opinion on it that you're not fluid in the market. And you have to be fluid, right? Because the markets are fluid. Your idea can't be so strict that you only trade that one way, because that won't allow you to adapt, right? You need to adapt in the markets. It can say one thing and go the other way, right? So never have a very solidified idea in your head that, hey, look, gold's going to go up today because of this happened yesterday. Um, as we saw today, right? It showed that gold was going up in the beginning, and then out of nowhere, boom, crashed uh, throughout the whole day. So, with that being said, I'll leave you to it. Leave that idea in your head. That just take it one step at a time and take what the market's giving you throughout your trading journey. Okay. With that, I'll see you guys in the next video. Bye bye. Peace.